What is going on with the Edmonton real estate market? Well, that is what we're going to cover in this video for the August Edmonton housing market update for August 2023. Getting a little late this month when I got it out, but there's a lot of great value packed into this video. We're going to look at all the different market segments, market as a whole, detached homes, half duplexes, townhouses, apartment condos. We're going to look at everything from how balanced those markets are. Is it more of a buyer's market? Is it more of a seller's market? Is it balanced? For each of those, we're also going to look at average prices and benchmark prices, which I find to be a little bit more useful, and how those have compared to the peaks of last year. And then at the end of the video, I've got a lot of really great tips and insights on what's happening in different segments of the market based on the age of the home, the price range, the property type. I just kind of spew a whole bunch of information at you that I hope is valuable. So make sure you watch the end of the video to get that part, and looking forward to getting your comments. All right, let's jump right in. Let's look at the total residential, which includes everything in the market. Detached houses, apartments, townhouses, half duplexes, everything. If we look at the market as a whole, it was sitting at an absorption rate of 31.02%, which just puts it into a balanced market. And this is a bit of a switch from June. In June, it was actually a little bit more balanced at 34%. So it has shifted a little bit. I'm not particularly surprised. Usually the market peaks in May or June, sometimes July, but in my experience, it's usually before that. So it's normal to see the activity start to drop a little bit in July. So that puts us kind of right on the cusp of buyers / balance. So I'd consider that pretty balanced overall. But as you'll see, as we get into the other parts of the market update, it does depend on the property type. So this is decent overall view, but it does switch. The average price for everything in July was $383,859, which was down 1.3% from June and still down from last year. It's down 4.4% from July 2022. We will look at benchmark prices later, which I find to be a little bit more accurate because averages kind of skew all over the place based on high price sales, low price sales. Not really the best metric to look at. Now, in terms of actives and solds, in the month of July in total, at the end of the month, there was 5,125 active listings and 1,590 sales. So the number of active listings is down just a little bit from June. It's down 0.52% from June and down 18.73% from July of 2022. So we're still seeing that same story where we're at reduced inventory levels. And the sales were down 9.25% from June and up 18.83% from July 2022, which is interesting. Last year, I definitely remember feeling and noticing a switch. As soon as we got into July, it really started to slow down. That's when all those interest rate hikes had really started to take effect. A lot of people, they put deals together in May and June. Maybe they were closing in July, but that gets counted in the months before. Like the day it's sold is the day you remove conditions. So if you see a sale that's in July, those people usually aren't closing till August and sometimes even September. So there was a lot of people trying to rush last year to get in and close on their property sometime in July because they had rate holds that were expiring. If they didn't use them and close by then, their rate was going to jump up. So we saw a pretty big drop off in activity as soon as we got into July in terms of new sales, even though it was still a busy month for closings. So to see that sales are up 18.83% from July 2022 is pretty interesting. We came into the summer months a little bit stronger than we did last year, even though interest rates were actually at a higher level now than they were at the same time last year. They were still going up at that time, okay? Average days on market was sitting at 46 days for the market as a whole versus 42 days in June. So it is creeping up a little bit from June and versus 40 days in July of last year. So even though there was actually more sales happening, technically it was taking 6 days on average longer to make that sale happen. Now, if we look at the market distribution by price range, this market distribution is helpful for just looking at, like, in general, what price brackets do people fall into once you include everything. And under 200,000 is just under 20% of the market, 19.31% of the market. Obviously, that's not going to be detached homes for the most part, as you'll see later. Between 2 and 300,000 is a little bit less. It's 16.79% of the market. And the biggest segment of the market was actually between 3 and 400,000 with 24.22% of the market. So about a quarter of the market is between that $300,000 and $400,000 price point, biggest chunk of the market as a whole. And then between 4 and 500,000 was 18.75% of the market. After that, 5 to 600,000 is just over 10% at 10.38%, and then just over 5% between 6 and 700,000. Then you're looking at 2.35% between 7 and 800,000, and then just over 1% between 8 and 900,000. Then we drop down to less than 1% of the market for every price bracket after that. For detached homes, the market's looking a little bit different than it did for the market as a whole. So for detached homes, the absorption rate was sitting at 39.25%, which actually puts it pretty much square in the middle of a balanced market, and that's actually bumped up from last month. So it's become more balanced in a way. So a little bit less in buyer's favor, a little bit more balanced. So it was moving a little bit more towards the seller side of the thing, but still kind of right in the middle, about as balanced as you could get from an absorption rate or months of inventory perspective. In June, it was sitting at 32%. So, you know, it came up about 7% in terms of the balance. So that's the most balanced we've seen it all year. And if you compare that to last July, last year, it was sitting at 20.31%. So big difference. It's actually more balanced this year than it was last year at this time. Average price for a detached home was sitting at $490,370, which was up 0.08% from last month, but it's still down from last year. For average prices, it was down 3.9% from July 2022. And now in terms of actives and solds, there was 2,186 active listings for detached homes at the end of the month and 858 sales. So the number of listings was down 27.13% from June 2023 and down 40.87% from July 2022. So we're seeing a pretty big decrease in inventory. This has been a similar story all year, but it almost looks like those numbers and percentages are getting bigger. So it does look like the inventory crunch is happening a little bit more, and that's clear just from seeing it moving from a buyer's market to a more balanced market. A lot of times this time of year we have peak inventory, but that's not the case with us being down over 27% from June and being over 40% lower inventory compared to July 2022 for detached homes. That's pretty significant. Now, in terms of sales, they're down 12.45% from June, which is normal, seeing a drop off into the summer months, but they're still up from last year. Average days on market was sitting at 45 days versus 40 days in June and 35 days in July of last year. And then in terms of the price brackets that we're seeing detached homes sell in, 1.36% of them were under 200,000, 9.08% between 2 and 300,000, then a pretty big chunk between 3 and 400,000. I can tell you a lot of people are looking in that price range, 26.63% between 3 and 400,000. Then the biggest chunk was between 4 and 500,000 with 27.41%, and then 17.28% between 5 and 600,000, and 8.77% between 6 and 700,000. Then just under 4% between 7 and 800,000, and just over 2% between 8 and 900,000, and then just over 1% between 900,000 and $1 million. Then it actually jumps up, but only because it's a bigger range. Between 1 million and 1.5 million, there was 1.68% of the market. Gets pretty small from there. Now we're gonna look briefly at semi-detached, which basically is going to include half duplexes for the most part, maybe some residential attached. The Realtors Association of Edmonton did change the way they did their statistics earlier this year, so a lot of my graphs are kind of messed up because it's comparing apples to oranges, basically. So I'm just gonna look at some of the information that is accurate, but semi-detached for the most part is gonna include half duplexes, okay? So the half duplex market was sitting just on the cusp between a balanced market and a seller's market with 49.46% absorption rate. I don't have anything to compare that to because, like I said, they've been changing the stats. So I'm only looking at it for this month, but it does show that that market's actually been a lot more competitive for buyers than the detached home market. There's not as many half duplexes available. So if you've got a nice half duplex, it shows well, you price it right, then more than likely it's gonna sell pretty quickly. Average price for a semi-detached was sitting at $381,788. At the end of the month in July, there was 372 active listings and there had been 184 sales. And the average days on market was sitting at 32 days. Not gonna compare the average days on market from previous months, but we will look at the price distribution. Under 2%, under 200,000. Almost 20% between 2 and 300,000, 19.33%. Biggest chunk is between 3 and 400,000, which, you know, that fits. 41.53% of the market between 3 and 400,000, and then 27.06% of the market between 4 and 500,000. After that, it drops a lot. There's not a lot between 5 and 600,000, with 6.34% of the market, and then it really drops off from there. Now we're going to briefly look at row/townhouses. Now I do believe this includes both townhouse condos and more than likely residential attached, which looks and feels a lot like a townhouse, except it doesn't have condo fees. It's still single family titled, but it is very much a townhouse type of feel. There's usually 3 or 4 or more of them connected to each other, and sometimes you still have neighbors on both sides unless you're an end unit. So those ones are a lot like a townhouse. They're just titled differently. Instead of being part of a condo, they're single family titled. All this should include both of those. And the absorption rate was pretty balanced again in this market, sitting at 38.64%, almost in the middle of being a balanced market. Average price was sitting at $255,938. At the end of the month, there was 559 active listings and there had been 216 sales. Average days on market was sitting at 40 days, and the price distribution was 35.78% of that under 200,000, which was actually the biggest chunk. Between 2 and 300,000, there was 33.96% of the market, pretty close there. And then between 3 and 400,000, it was 25.72% of the market. Then it pretty much falls off the map once you get over 400,000. There was only 3.56% of the market between 4 and 500,000, and less than 1% for each price bracket after that. Now, last but not least, at least from this perspective, is apartment condominiums. They were sitting at an absorption rate of 21.57%, which still puts it in a relatively strong buyer's market. Now you can see how this all kind of goes together. When we were looking at the market as a whole, it showed it kind of on the cusp of buyers and balanced, and then everything else we looked after that was pretty balanced, or even getting close to seller's market in one category. Now we jump over to apartment condos, and we're seeing that this is still in a buyer's market. So that's dragging the rest of the market down when you're looking at the total statistics. That's why it's useful to look at it total and then individual market segments, so you can get a little bit better idea on what's happening there versus somewhere else. Because if you take general advice about the market and then you apply it to the apartment condo market, you're probably going to make some mistakes whether you're buying or selling. Now, since it's a buyer's market, typically that means sellers are getting beaten up. They're going to have a hard time selling their condo or their apartment condo unless they price it very competitively. You got to be the best value in your building. Otherwise, you're going to sit for months and months. Average price was sitting at $192,971. That's up 5% from June and down 2.8% from July. In terms of active and sold listings, there was 1,539 active listings at the end of the month and 332 sales. So that shows you that imbalance there. A lot more active listings than there are sales. With that said, the inventory is still down for apartment condos. It was down over 20% from June of 2023 and down 39.98% from July of 2022. So we're still seeing an inventory drop in apartment condos, but it's still a buyer's market anyway. And the sales are actually up a little bit from June, up 0.3%, pretty negligible, but up 36.63% from July 2022. Average days on market was sitting at 60 days. And then the market distribution was almost entirely, it feels like, under 200,000 was 67.15% of the market under 200,000, and then 23.74% of the market between 2 and 300,000. Then you're only at 6.45% of the market between 3 and 400,000. Now, I mentioned earlier that I prefer the home price index versus average prices because average prices can get skewed quite a bit by multiple factors. Now, the home price index isn't perfect, but it is helpful in determining what's a typical home worth with certain attributes. So what we'll do is we're going to look at the home price index for 4 property types. We're going to look at 2-story homes, 1-story homes, which would be typically like a bungalow or like a bi-level or something like that, townhouses, and then apartments. Now, for 2-story homes in July 2023, the benchmark price was sitting at $484,700, and that is still down quite a bit from the peak of last year. On here, I showed you what the peak was. The peak was actually April 2022, and it was sitting at $530,600. Then you can see once we got into the summer months, it kind of hit the top and then went down in the fall and the winter months, and then it's sort of inched back up since there. Now, you'll see this same pattern with all the different property types here. Feels a little bit more pronounced with detached homes, 1-story and 2-story, since they did ramp up a little bit more. They had a little bit further to fall, and obviously they're gonna be a little bit more price sensitive too, or interest rate sensitive, since they're higher prices. So when interest rates go up, that really starts to hurt it. Now, a lot of people are wondering, is the same thing gonna happen this year? Or if you're not wondering, well, here, now you can wonder about it. It is possible, like we're definitely at high interest rates again. It's possible the Bank of Canada will hike again in September. I think they're meeting again in September, and the fixed rates are up quite a bit as well right now. We're past the spring months. We're pretty much past the summer months since I'm filming this late in August. I wouldn't be surprised if we do see a dip as we get into the fall and winter months again. Not sure if it's going to be as pronounced as it was last year, but it all depends on how much demand there is versus how many options there are and how many listings there are. So I've noticed a lot of people on the buyer side are kind of at their limit trying to get into something, and they're struggling to find properties that fit within their price range, and the sellers aren't really wanting to budge much either. So who will win? We'll see. My gut is it might not be quite as strong as it was last year in Edmonton, but it is possible given we're still at higher interest rates. But our inventory, I think, is making up for that a little bit. So I did talk about this earlier in the video, that our inventory levels are down. And when inventory levels are down like that, that does reduce some of the downward pressure on prices. If we had a lot higher inventory and we were in buyer's market territory, then I think we would start seeing price drops. But since most of the market segments, with the exception of apartment condos, are still pretty balanced, or at least close to being balanced, I don't see a lot of downward pressure on prices right now, but obviously that can change as we get more into the fall and the winter months. So you're going to want to keep a close eye on that to see what's happening. The prices for the other ones: 1-story single family, the benchmark price was sitting at $375,800, which was down from the peak of $407,500 in May 2022. Townhouses, they're sitting at $232,600 versus a $2,048,000 benchmark price in the peak last year of June 2022. So you can see there's not as big of a gap there. And then for apartment condos, we're sitting at $174,900, and the peak in June 2022 was $182,500. They're all on a similar pattern, but like I said, it's bigger for the detached homes. And that's it for the home price index values. So what does all this mean if you're looking to buy or sell a home right now, going into the fall months of 2023, or if you're thinking of buying the next 3 to 6 months or sometime next year? Well, it really depends on what market segment you're either buying or selling into. And sometimes you're selling in one and buying in another. So the market conditions are going to vary based on property type, price range, age of the home. There's a lot of different segments there. I'll probably be making some other videos about some of those different segments. They might be shorts instead of long form videos. But generally speaking, if you're looking at buying, if you are under 400,000, you're gonna find that the market's quite competitive. If you're looking at properties that don't need a lot of work, and you're trying to get the best bang for your buck, a lot of people are really struggling right now. A lot of the good properties go quickly, or they get multiple offers still. I'm still seeing that happen. So you might see a property come up on the market, it's 350,000, and you're going, oh, okay, you know, hopefully we could get it for 340, and then you go and look at it and you find out they're getting 3 other offers, and it's probably gonna go over list price in that case. So if you're looking at the, for lack of a better term, bottom of the barrel pricing and trying to really squeeze the dollar and get the best value for your dollar, which can't blame you for wanting to do that. It is going to be competitive. More than likely, it's going to be frustrating at times, especially if you're between that $300,000 and $400,000 price range. Once you get over that, some of that pressure does ease off a little bit, and you'll have a little bit more breathing room. But if you're trying to get something in that price range, and you're really trying to squeeze every last ounce you can out of your dollar, it's going to be pretty competitive for you. Might take longer than you wanted it to, or you might have to make some compromises. If you're buying an apartment condo, you'll have pretty decent inventory options in a lot of cases. Some of the inventory is still gonna seem quite overpriced, so there might be some frustration with that because a lot of the sellers aren't happy with what they can get for their apartment condos. They throw it up on the market and say, hey, well, maybe if we can get this, we'll sell, otherwise we'll stay. Or they're just not ready to accept where the market's at. So even though there is more inventory, you might find that the units that you like the most are priced at a level that you're not happy with. So there could still be some frustration there, but generally the market conditions are in your favor. There's usually not gonna be a lot of other buyers going after the same condo. So it's pretty rare to get into multiple offers. It can still happen, but you'll have a lot easier time in terms of competition. If you're selling an apartment condo, it's the exact opposite. You've got to make sure you price it right. Otherwise, you're going to sit on the market for months or perhaps years if you're way out to lunch on your price. So if you want to get it sold, you've got to be, best value in the building. You're not going to get a ton of showings. Even if you're priced well, you're not going to have people breaking down your door. Like, it's not like the detached home market between 300 and 400,000. If you price your condo right, you might still only get 1 or 2 showings a week or less in a lot of cases. It takes a little bit longer. You get a decent buyer that comes to the door, you can put a deal together. They're probably going to negotiate with you, get your price down a little bit. It's rare to have multiple buyers there. Detached homes that are older, it's a little bit different. If the house needs quite a bit of work, you also need to be quite competitively priced because a lot of the buyers out there are strapped for cash. The interest rates being so high is making it challenging. So most buyers I'm finding are not wanting properties that need a lot of work. So if your roof needs to be done or your furnace is on its last legs, windows are old, if it needs a lot of cosmetic upgrades, the flooring's all worn out and all that kind of stuff, it needs a paint job. Those are types of things that are really gonna hurt the sale of the property, and you need to price it quite aggressively to get it sold, either to an investor, a flipper, or someone that's willing to take on the project and actually feel like they're getting rewarded for it versus punished for it. Renovations have gotten a lot more expensive, materials are more expensive, labor's more expensive, plus with interest rates being higher, it just makes it harder for buyers to make it work if your property needs work. So you really gotta price it well. Should potentially consider actually doing some of that work before you sell if you've got the financial resources to do it. Working with your agent, or if you're working with me, I can help guide you on what types of upgrades or whatever you should do before selling, because they're really gonna hurt you on the sale. Once you get into higher price points in the detached home market, it gets a little bit softer over 500K, but you saw there's still a decent amount of transactions happening in that range, just not quite as many as there were before. Whether you're buying or selling new versus old, a lot of buyers are gravitating towards newer properties, or if they are buying older properties, they're usually having a preference for renovated ones. So if you're in the detached home market, actually if you're in any of the markets and you're selling and your property is older and out of date, whether it's just cosmetically or if it's requiring work, you're gonna have a lot more challenges versus if it's newer or older and upgraded without much work. Most buyers are looking for stuff without much work right now. So those are some of the different market segments and conditions. Hopefully I covered a good chunk of it there. Hope that was valuable. Let me know what you guys think in the comments. Hope you liked the video. Make sure to like and subscribe. And if you know someone that is thinking about buying or selling a home in the next year, share this video with them. If you got value out of it, they can probably get value out of it too. And I'd love it if you could share it with some other people that it could help. So thanks so much for watching. I'll see you on the next video, and bye for now.